Welcome, Practical Finances, friends and family. This is Curtis, your host. Now, I want to thank you for joining me for episode 2 of the fall season. Now, I'm really excited about today's show. My special guest today is Tiffanys Wright, award-winning mortgage loan officer extraordinaire with SYNOVUS Bank. Now, Tiffanys is the foremost authority on everything mortgages. In fact, she is the best loan officer in the Southeast United States. Let me give you a quick story about Tiffanys. Now, Tiffanys just helped me refinance my home about a month ago, and she did an extraordinary, exceptional job. My neighbor across the street, a brand new neighbor, just moved in about a month ago. I introduced myself to him, found out that she financed his mortgage. Then I talked to my previous neighbor who just moved from the same house, found out that she financed their mortgage. She is financing the whole entire block. She was exceptional. Everybody was glowing. I gave her a glowing recommendation, glowing appraisal of what she did, and it was fantastic. Anyway, with that being said, instead of me talking about her, let me bring her on. So here's our special guest, Tiffanys. Tiffanys, how are you?
Hey, I'm good. How are you? Thank you for all those great yays there.
You deserve it. You're fantastic.
Well, I'm glad to be here today and maybe talk about some mortgages and things like that with your viewers. So,
yeah, where you are the foremost person to do that, and I'm excited for you to share your knowledge and experience just for a few minutes here with the audience. All right.
Well, I'm glad to.
All right. Thank you. Well, Tiffanys, I'm going to ask you just a simple, basic question right off the bat.
Yeah.
Tell me about yourself a little bit. Just tell us a little bit about you. Humanize yourself.
Oh, well, okay, that's really easy. I'm just a small town girl. Well, when I was growing up, I'm from Mount Juliet here locally.
Okay.
Of course, when I was growing up, it was very small town. Of course, it's not so much of a small town anymore. It's really grown. Mm-hmm. But was born and raised here. My family has been in this community for over 100 years. I grew up on a farm that I still live on, and the majority of my family, we still live here. Graduated from Mount Juliet High School, left home, went to college at the University of Tennessee, Knoxville, go Vols.
My goodness.
Came back home, married my best friend who's also from Nashville. We put down our roots here and got 2 great kids, and one's in college, one's a junior in high school. And that's really sort of kind of my personal family background. In terms of professionally, been in the mortgage business for about 25 years.
Oh, wow. Oh, you tell on yourself.
I had to think about that. Yeah.
Now, my story is I started when I was 6 years old. What's your story?
I'm pretty transparent and pretty honest now. I started very early. Early.
There we go. That's a good compromise.
So, but yeah, 25 years. Been doing mortgages, and I absolutely love it. So, love helping people.
Oh, fantastic. Well, being in the industry for 25 years, you definitely love what you do. No one stays that long, and if they didn't love it. So
I agree. You gotta love what you do.
Yes, ma'am. Yes, ma'am. Well, I guess, Tiffanys, we're going to just dive right in.
Okay.
All right. I'm just going to ask you a couple of questions here. First one, I'm a first-time home buyer.
Yeah.
All right. So why should I bother? Should I just, maybe I should just go on and rent and not purchase a house? Is my thinking correct there? Or are there benefits to home ownership, for instance, just generally?
There's definitely benefits to home ownership. No doubt about that. I can answer that pretty quickly right off. There's definitely benefits to home ownership. Okay. But I think, your initial question, like, should I bother as a first-time home buyer? I think that's a personal question.
Sure.
Now, I think what I would say is, should you have the conversation? Absolutely. Okay. Should you have the conversation about, is home ownership something that I should be thinking about now? Because home ownership it's a big responsibility. Okay. You know, purchasing a home is probably most people's biggest financial purchase or transaction is going to be buying a home. So it is not something that, you know, you should just do without really thinking about and doing a deep dive and questioning yourself, like, okay, is this really something I should do? You know, asking yourself, okay, you know, in your situation, is renting really more beneficial to me right now, currently? You know, say you're just moving to a city, you're only going to be there 6 months to a year, and you know that for sure. You know, does it make sense for you to go ahead and buy something when you know you're going to be traveling back and forth and turning around? Maybe renting is actually more beneficial to you.
Sure.
So I guess I'll answer that question saying, I think for each individual person, they have to sort of kind of answer that question for themselves.
Mm-hmm.
But I would say, have the conversation. Always pick up the phone and call someone in your kind of, what I say, your financial branch of people. You know, you have accountant, or, you know, financial planner, or, you know, a mortgage professional, or if you know somebody who's got their real estate license, stop and have the conversation.
That makes complete sense. That makes sense. So, like you said, you have to personalize it. You have to ask your question.
Yeah.
That particular situation is not, like, home ownership is not for everybody.
Yes.
So you have to determine if it's going to be for you. Is that understanding? Okay.
That is absolutely right. That, I think that is a very individual question that you have to. Everybody's got to make the best decision with the information that they have right now at that moment, and what you know that might be coming, you know, ahead. You have to answer that question to see if home ownership is the right thing for you.
Excellent. Okay, makes sense. Thank you for that, Tiffany.
So
my next question is, okay, so I've done what you said. I have talked to my CPA, my financial planner. I've prayed about it, of course, and I've come to the decision where I want to purchase a house. Yeah. All right. So what are some of the things I need to start doing to prepare myself for home ownership?
Okay, so the first thing I'm going to say is, probably you're not going to be, but, you know, you're like, I don't expect that, but be honest with yourself.
Okay.
Be honest with yourself. And then the other thing I will say is, be realistic.
Okay.
Particularly if you're a first-time home buyer, you've probably, and what I mean by that and the being realistic is, you've been living the comforts of your parents' house, you know, and you know, the comforts of, you know, you probably have you know, nicer things and all of those kinds of, you know, everybody likes HGTV. I'm just telling you, this is the stuff, particularly with first-time home buyers, okay?
Sure.
You know, everybody likes HGTV, and everybody wants that kind of HGTV experience. Well, that's not always the reality.
Sure.
Okay. And you have to, and what I say is, be realistic, is you have to understand, particularly if you're coming where you were fortunate, where you're a second generation homeowner and your parents owned a home, or maybe they might be even renting a really nice house. You know, you've got to be realistic that they're probably in their second, third, fourth house. Okay.
Right.
And you're buying your first house. You need to think about, okay, what is practical? What is going to help me stay on task in terms of paying my bills?
Sure.
You know, what can I afford? I'm not saying, you know, you just, you know, don't be mindful of dreaming and all that stuff. I want you to dream and be safe and all that, but just be very realistic. Okay.
So, you know, remember the show, what is it, 20 years ago, Lifestyles of the Rich and Famous?
Yes.
So,
yeah, I do.
Realistic.
I used to watch it.
You can't go out and buy $1 million house right off the bat.
That's right. And then that's a very good thing. Is like, you know, the other thing I'll say is, you know, don't compare yourself to others. Even other people who may seem to be similarly situated.
Sure.
Like you might work at a company,
Mhm.
and you have your neighbor over here, you both have the same title, you both have the same income, and they just went out and bought a $400,000 house or whatever, and you're
Right.
like, okay, well, we do the same job, we make the same kind of money, I'm going to go out there and buy me a $400,000 house. Well, you can't really do that because you don't really know what all things they have going for them, or that
Sure.
put them in the situation to buy that, and vice versa. So don't really, I would say, be honest, be realistic, don't compare yourself to others. With all of that, know your budget, know your income, know your debts. I always tell my home buyer classes, and I'll also say this: take a home buyer's class.
Okay.
Take a home buyer's class.
Okay.
But I always tell my my students, don't pick out that house first. That's not the first step. The first step is, maybe pulling your 3 months bank statements. Okay, because those 3 months bank statements, they're really gonna give you a view into your lifestyle.
Sure.
Where you spend your money, how often you go to the grocery store, how much that, how often you go to the movies, where do you spend your money?
Right.
So you can do a deep dive and really sort of kind of dissect, like, okay, what really can I afford? Not what I can get approved for, but what can I afford? And pulling those bank statements together, for the, that last quarter is really going to give you that view of what you're spending. Because sometimes with technology, we're just swiping, or just tapping with that phone. That money is just going, and we're not really sort of kind of paying attention of where we're spending money. So I would say,
but it would also give a person the opportunity to there may be a lot of frivolous spending that the individual is doing that they could actually cut back on, which could actually help them to purchase a house, or maybe even a larger house. For instance, they may be spending $1,000 a month on eating out. When they can get the same pleasure and satisfaction if they spent $500 eating out and then go to the grocery store. But that $500 can be used to purchase, a little more house, or just help them afford a house. Does that make sense?
It does. And
right?
And you're exactly right. And, the other thing that I would say is, as you start doing that deep dive into your lifestyle and what you've got, come think about, okay, what are you going to do in the future? Are you going to go back to school? Do you have student loans? Are they getting ready to come due? You have to start really sort of kind of thinking, okay, am I working in a job where I know that I'm going to be making some changes, or what's going on in the world, like what we're dealing with now, where, something might affect my job.
Sure.
Asking those questions, I always use the example of, if you know that you've taken your car to your favorite mechanic, 4 times in the last 12 months, well, guess what?
You need a new car.
You better be thinking, I need a new car, right?
That's a good point.
And that's why I'm saying, be honest, be truly honest. Do not set yourself up to fail. And if you do those things right out the gate, sort of kind of to prepare yourself, you're kind of gonna be in a good position in terms of, being ready and preparing yourselves for a purchase.
Okay, that's perfect. And the thing that resonates in my head is you keep talking, and you said this earlier, but just being realistic.
Yes.
Giving
realistic,
a baseline view of, okay, what am I spending? How much am I truly spending here? Not what I'm fantasizing about, so to speak, but what am I really spending?
Yeah, write it down. I mean, and that's why we say, get those bank statements and look at where and what you're spending. and write it down and
Mm.
really understand, okay, I'm paying, and it might be a situation where you're already paying rent.
Sure.
And so many people will call me and say, oh, well, I think, because I always ask, what do you think your budget is? Or what's your comfort level?
Great question.
And they'll say, oh, I just don't think I can do more than, $800,
Mhm.
a month. And we then start, going into like, okay, well, what are you spending? Or why do you think you can only spend that much? And it's like, well, I've got this. And a lot of times, sometimes they don't really know. They're just saying, well, I'm paying $1,000 in rent,
Mhm.
and so I want to pay less, which
Okay.
I always, this is just me, but my thing is, okay, why would you be willing to pay more for something that you're renting than something that's an investment?
Oh,
It would
great
be an
question.
investment for you,
Yes.
I mean, something that, should appreciate, uh, you know, grow for you, and you can get that back. I always say, you bought a house for $100,000
Mhm.
and lived there for 10 years and turned around 10 years from now and sold it for $100,000, you lived there for free, basically.
Mhm.
Plus
Yes, that's
tax
true.
advantages and everything else.
Yeah.
Just
Yeah.
assume that you just live there. You cannot do that when you're renting.
No, no, because you are actually paying the landowners or landlords mortgage and rent and making them rich is what you're doing
Yeah.
when you're renting. That's how I see it.
Listen, you're helping their financial portfolio.
Exactly. 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 Why not help yourself?
Yes.
Yeah.
Yes.
Yeah.
Start there. That's
Yeah.
true.
So for,
I
for
think that's a
those
long answer to what you asked me, but yeah.
so for those of you, that first question that we asked, why should I bother? It kind of goes back to that. That's a
It,
good reason why you should bother,
you
and
should.
why that should be important to you, right?
I think so.
Okay.
I think
Okay.
so.
Well, okay. Let's go to the next question. This will be a good one for you here. Um, Talk to me about the pitfalls. Give me some. This is all about being realistic. What's a pitfall of a?
Well, that's easy because I keep them here when I talk to people. Here we go. Okay, so here are some pitfalls. Okay,
Yeah.
that we run into. A lot of times I'll ask my clients, tell me about your job history.
Mm,
Okay, like
okay.
your current job.
Okay.
And the main thing that we're looking for is we want to know that you have maintained your job. Okay, like this, I have this little thing that says maintain your current job to show financial and employment stability. We've
Sure.
got to determine that you've got what we call stable income.
Mm,
Stable income. The stable income usually typically is you've been on a job for the last 2 years,
mhm.
particularly in the same line of work. Um, and
Okay.
that's really sort of kind of what we're looking at. That shows that you're stable.
Sure.
Quitting
Sure.
your job, changing jobs, or
Mhm.
even a lot of times moving to other jobs within a company could be a pitfall. For example, I had a customer who worked for the same company, had been there like 5 years,
Sure.
but they changed positions within that company where they were getting paid a certain way doing this one particular job. But then when they went over to this other kind of job, they were getting paid completely different.
Like going from salary to commission, for instance, something like
Correct.
that. Okay.
They had worked at the same company, same business, but how they got paid changed, and that could really affect your ability to get approved. So job changing, going from one career to another career,
Sure.
with no, no relations, no correlation.
Sure.
That's a fall. Avoid large purchases.
Okay.
Spending a whole lot of money, significant purchases can impact you.
Mhm.
Particularly on the debt to income ratio. Let's see. Do not run your own credit reports.
Okay.
You need to have an idea of what your credit is
Okay.
for
Okay.
sure, but just don't, keep pulling your credit here and there and having different people pull your credit. A lot of the times the credit reporting agencies, which there's TransUnion, Equifax, and Experian, they have those algorithms that are designed that, you can talk to 2 or 3 different lenders in a set period of time.
Right.
It shouldn't really be a huge negative effect on your credit. However, if you start doing
that consumers are allowed to shop for a mortgage, right?
Absolutely. And we encourage that. We encourage you to shop and do comparison, but do it within a period of time that you should do that anyway, because you need to compare apples to apples, because the rates change every day. You need to be making sure that you are, don't talk to somebody 6 months ago and then call somebody, you need to be talking in a particular period of time within 30 to 45 days.
Okay. Short period of time.
Yeah. So the other thing is, avoiding depositing or withdrawing large amounts of money in and out of your bank. Large movements of funds back and forth. Those, really pretty much all non-payroll deposits, we're going to ask, what is that? Where did that come from? So keep that in mind. Right. And your banking history should show stability too. I mean, you should be in a position to where you have the ability to show that you can save money.
Sure.
Okay. Everything that we do on my end is all about mitigating risk.
Okay.
And I tell my homebuyer students all the time that in my world, we're really sort of kind of worried about the same things that you guys would be worried about individually if you, had a family member or a church member or a neighbor or whoever, a coworker come to ask you to borrow money.
Gotcha.
You're going to be concerned about 2 things. One, are they going to pay me back? And then 2, are they going to pay me back on time? I promise you, that's simple. Right. That's really what we're concerned about in our world. And it's all about, all of these different things that we have set in place to basically help us ensure those 2 things, that you're going to pay us back and you're going to pay us back on time.
I love how you put that, and that is, you kind of put yourself in the mortgage company or the financial institution's shoes, so to speak. Yes. So you have to think. So when they're asking you questions, when you're going through the process and they're asking to verify things, you have to think. You got to think of it from their perspective. They got to make sure that, like you said, you're going to pay us back on time. You're going to pay us back and pay us back on time.
That's
right. We have to make sure, we have to have reasonable confidence. Well, not reasonable. We have to have supreme confidence that that's going to happen before we can lend you the money. That's right.
And let's just be honest. I mean, we're now sort of required to make sure that you qualify. Something that, talk about pitfalls, that, previously in history in lending, we didn't have all these checks and balances, and we didn't do all of these qualifying measures. And look what happened. We had the financial crisis of 08, 09, 10, everybody kind of remembers that. So now a lot of this is not just for us, it's also for the consumer. It's it's for the consumer to make sure they really, really can qualify for that mortgage. And we want you to be happy in that home. Buying a house, it should be a great thing.
Right.
You should feel great driving up to your house every day when you come home from work. It should not be a burden.
Right. That's exact. I love that. That's fantastic.
It should not be a burden. Okay, so let me tell you 2 more pitfalls.
Go for it, please.
Consistently pay your creditors and do not skip payments.
Okay.
Do not do that. Keep in mind that disputing bills can show up as a questionable item on your credit. So, you need to really sort of kind of keep that in mind.
Sure.
And do not co-sign. I'm sorry.
Kind of expound on that a little bit. Why can that be detrimental?
Well, okay, so if you really have to help somebody out, I mean, you got to do what you got to do. However, you need to know and understand that when you co-sign, for someone on a debt that potentially could be loans that we're going to be required to evaluate and analyze in your qualification.
Sure, sure.
And particularly if it's a situation where you co-signed with someone and you don't really have control over that debt and who pays it and all of that, you need to realize that every time that person's late, you're late.
Right.
Because you co-sign and back that loan again. I mean, but we really sort of kind of encourage you to really, really think hard. I know sometimes that, we just have to do the things that we need to do to help our family,
right?
Sometimes our friends, but we try to don't, just really, if you can avoid it, co-signing, avoid co-signing.
So what I'm hearing,
those are like the major kind of pitfalls.
That actually, I mean, when a mortgage company or financial institution underwriter is looking at that, if you have a debt that you have co-signed, that debt will be included in your debt to income ratio, would it not?
That's true, unless you can document otherwise. Okay, and there are some situations, and I say this all the time to my students when I'm teaching my class. In our world, you can tell me all day long that something happened.
Sure.
But if I can't document it, it basically did not happen.
Okay. Prove it.
So whatever you present to us, I've got to then present that to an underwriter, and they're going to want to see documentation. So if you do co-sign for someone, typically most programs are going to want to see that you truly are the co-signer, and they're going to want to have some type of history or documentation that the person, in first position on that loan, is truly responsible for that loan. Is truly making the payments. It cannot be a situation where you're the co-signer and they give you the money and you pay it. No, it needs to be truly a co-signed debt.
So canceled checks, a bank statement from their bank account showing an item coming from them.
You got to document the story.
Gotcha.
You got to document the story.
Okay. Awesome.
Okay.
Okay.
Yeah.
Okay.
But those are sort of kind of, I keep this right here on my desk. That's why I had it. I'm glad you asked that.
Yeah. Fantastic. Well, I got another question for you real quick. And this is about in the home buyers process here. Can you tell me some of the different players that come together to basically complete the home buying process? I know we got the mortgage loan officer. That's one person.
Yeah.
Can you name other people or other entities?
All right. So let's walk through a purchase transaction.
Gotcha.
So in a purchase transaction, obviously you have a buyer and then you have a seller.
Okay.
Typically, or you have a builder. Let's say you're doing new construction. So you've got a buyer, seller, builder, something like that.
Sure.
So then you should, I absolutely encourage 120%. You should have a real estate agent.
Yes.
Can I say that again? 100 and get your own real estate agent. Okay, so a buyer should have a real estate agent, their own real estate agent, their own for them. Then you'll have a listing agent or the seller's realtor. So you usually have two agents, two realtors.
It's like you don't want to go to court without a lawyer. You need somebody to advocate for you, right?
Yeah, no, I'm very pro lawyer.
Oh, of course.
Very pro lawyer. Okay, so you have the buyer, the seller, two realtors. So if you actually go and make a contract, get an executed contract, probably the first people you're going to talk to in terms of the actual house itself is you're going to make sure you have a home inspector.
Sure.
Make sure that home is good and solid, needing repairs, to negotiate all that.
Sure.
And I'm not a licensed real estate agent, let me say that, but just in case something comes off, they're like, she's not a realtor. But let me just say that I'm not a licensed real estate, whatever. But home inspector, typically you're gonna need like some type of pest control company.
Okay. Make sure
to do termites. For the house. So let's sort of kind of shift to the loan process part. So of course, so you got the realtors, you got a home inspector, you got a termite person. Then you're gonna go to your lender and say, hey, because you've been pre-approved. I want to make sure I say that. Get pre-approved first. Don't buy the house first. Go get your money first. You can talk to a realtor and all that, but do not go look at houses until you get pre-approved. So you got a loan officer who will help you choose the right program, get everything set up. Then they will hand that over to the processor. The processor is usually the go-between the loan officer and the underwriter. And the underwriter is the one who basically makes the final decision on the loan. That's where they can approve it or deny it based on the loan that you've chosen and, certain criteria. But part of that process, and, I always say this in my class too, there's two people that we really got to make sure is secure in this scenario. We've got to make sure that the borrower can do those things that we talked about, meaning they can borrow the money and pay it back on time. But that property is equally important.
I got you.
And one of the things that we're going to do to establish the validity of that property is we're going to get an appraisal. So you have an appraiser
to determine the value.
That's right. So you're going to have an appraiser and make sure that the house is valid. And then once everything is approved and ready to go, we would then take all the documents, and then we will need like a settlement agent or a title company, a closing attorney, depending on where you are. I don't know where your video is going, but there's settlement agents, title companies, closing attorneys. In different states have different requirements to who handles that for you, but they're sort of kind of the last piece. They're the ones that put it all together, make sure everybody gets their money and everything's recorded so everybody publicly knows you have bought a house and you own it. Then you've got some other people that are important players. You've got nonprofit organizations and housing counseling agencies who you will use to get a first-time home buyer certificate, particularly if you're going to do some type of 100% or very low money down program, down payment assistance programs. There's plenty of those out there. I don't know if we're going to get into that today. I always say, look, that's really very borrower specific on those DPAs. So you probably just need to contact a mortgage officer to see what you can qualify for.
Yeah, that's fair.
We've got nonprofit counseling agencies. And then last but not least, the 12th man is what I call them.
Okay.
Your family, your friends, your coworkers.
Sure.
Let's just be honest. I cannot tell you how many conversations or questions I have to answer because a coworker said this, or my parent said this, or my cousin had this. I have to say they're a player in the process.
Yes.
Okay. More likely, they're the ones going with you to look at the houses, that you're having these conversations with them. They're actually going through this with you. You're the one that's actually doing everything, but I promise they're like in football terms, they're the 12th man.
They're supporting you. That's exactly that's what fans do. You're right. They're like fans.
They're like fans. They're gonna boo or no, it's not good or yay. And I think that's it. I mean, it's a lot of people. People do not understand it is more than a notion to go from A to Z in this process. And it takes a lot of people, a lot of caring, dedicated people to make it happen.
it's amazing that with so many people and so many entities that are involved in the home buying process, sometimes that you can get an application, well, a whole file from, beginning of a person from the beginning of the process all the way to closing. It's amazing how it all kind of works in concert, though.
Yes, it is. It's beautiful, actually. It's beautiful.
Obviously,
it is. I'm being serious. It is so, this for me, that's why I've been doing it for 25 years. It's so fulfilling to me. Particularly the first time home buyers are so excited, but even some of the ones who are maybe buying their dream home, or, they're able to, and it might be like a life moment thing that's going on where something has happened to a parent who you now have to bring them into your home, and you thought that you were going to be in your house for a long time, but then the house that you have doesn't really make sense to bring in that parent, or, you might have to bring in a niece or nephew. I'm just saying life happens. So you never really know what circumstances that you're going to have to help somebody get through that life circumstance by helping them buy another piece of property.
Sure. That makes complete sense. You just don't know the circumstance, but the way you framed that and phrased that, Tiffany, was I love that. That does make a lot of sense, and I know that that will resonate with the people watching our show. That will resonate with them. Well, Tiffany, honestly, I want to thank you for coming on my show today and sharing your knowledge, your insight, and your wisdom with the audience there. Much appreciated. Thank you so much for
welcome. Thank you for having me. I'm very excited. And, thank you for doing this.
No problem.
To you, because, this is great information. And I think it's information that people want to hear. It's important. And, homeownership is so very, very important. It still is probably the number one generator of generational growth in the community for everybody, but particularly in the Black and Brown community, it is still number one. So it's very, very important work that you're doing. So thank you for having me.
That's not a problem. Thank you so much. I really appreciate you. Like I said, I was really excited to have you on the show, and the knowledge that you gave was just fantastic. A+, as usual. As usual, you were outstanding. So thank you so much, Tiffany.
You're welcome.
Thank you for your time so much. And again, we want to thank Tiffany again for her coming on the show and again, giving us so much good information. Now, I want you to join me next week for episode 3 of the fall season, when my special guest will be Realtor TJ Ojahamed. Our discussion is going to be about the ins and outs of purchasing real estate. Now, if you want to contact me, please email me at curtis@practical_finances.com. You can also follow me on the various social media platforms. Facebook, which is Facebook at practical_finances, Instagram, which is at practical_finances, or YouTube, which is YouTube/practical finances. I want to thank you so much for joining me this evening. I look forward to seeing you next week. And until then, be blessed.
Be blessed.